Hi friends, today we are going to discuss about the psychology of traders and investors' behavior in stock market. See, uh, we all know that in India, less than 5% of the people are only into stock market. Okay, the remaining people they don't know what is stock market. It's not mean that we cannot say that they don't know. They come here, they lose money, and then they avoid stock market. Okay, so why it is happening? That's what we are going to discuss about. See, there are 2,000 listed entities in NSE, and there are 5,000 to 7,000 listed entities in BSE. Okay, so is there any changes in the fundamentals on a daily basis? Then what makes the stock market to move up and down on a daily basis? See, it's all sentiment. See the emotions and sentiments changes on a daily basis. So, if you want to become a successful investor, what you have to do? That's we are going to discuss it. Stock market is a place where an optimistic and pessimistic meet each other. The seller who sells on the expectation that the stock price will go down is not mean that he is happy with whatever he is getting. Okay, on expecting that it will go down, he is selling. Buyer on expectation that the stock price will go up, he buys the shares. It's not mean that love and affection he is buying that. Okay, so one pessimistic and one optimistic, they meet each other and then they end up in trade. In real life, if pessimistic and optimistic, if they meet, what will happen? They end up in quarrel. So just I have a small slide to discuss in detail about the behavior of our traders and investors and what to do. I am giving the solution also. Let's see. Efficient market hypothesis is the price reflect all the information available. See, the today's price, what it is hovering is for the future earnings. So it is discounted at a price and it is discounted for the all the available information about the company. All the available information. Note it down. Okay. See, why people lose us? Because the people enter into the stock price at higher price without knowing the information about the company. One thing. Another thing, may not have proper information. Next one is may not understand the information. See, now our Google uncle is there. Everything is available. Market is flooded with information. Lot of broking houses are giving the free research reports. Then what is the problem now? The problem is the interpretation. If you are not using the data available to you, then the data has to go to the garbage. Okay. See, then what is the difference between the may not have information and may not understand the information? There is a fine line. Yes, I'll explain it. See, there is a game called poker. Whoever travel abroad, whoever goes to the casino, they might be knowing it. Even in India, a lot of casino companies are getting listed. Okay. See, the poker is a game. You don't have information. A player may not have information about the other's card. So it is simply a gambling. If you invest in stock market without any information, that is a gambling. That's what I say. Okay. Then another thing, who you may not understand the information. The game chess, you know the opponent, the coins are moved according to that, but the strategy you may not able to understand the strategy. If you are not understanding about the information also, wrong. The people fail because of this reason. These two reasons. Why everyone says the large cap? See, there are a lot of analysts, they cover only the large caps. So the research reports are available and then all the informations are discounted in the stock market. So that is the reason that most of the people say that go to large cap, go to large cap. Other than that, nothing in that large cap. Okay, so the information is freely available, easy to predict also. See, why the rising stocks rises? If a stock goes up, it keeps going. When investor or trader who approaches, they look at the past history, not the future. No one able to think about the future. Whoever think about the future, they are highly successful people. Okay, I am talking about the traders or investors. See, the past performance, they expect that it will reflect in future. Based on the assumption, they enter into that. So they overreact, and then suppose if there is any earning surprise, it also overreact. Always you say that the glamorous stocks are always high PE. For example, in India, now you take Apple India, Sona BLW, Sona Comstar, or some stocks like that. Even Avanti, D-Mart supermarket. These are all very expensive stocks. The expensive stocks goes expensive only based on the assumption that they will perform more. And then the value stocks are always at the low PE only, because when the market is we keep on rising, the people, they want to bet into the winning horses, not into the failing horses. Okay, the stock loses, it keeps losing because of underreaction. Even when the company gives good numbers, people neglect it based on the past performance. Okay, if the past performance is not good, people may not consider the stocks. And then there is a strategy going on: buy the winners and sell the loser. That is the concept going on. Another thing, suppose if someone bought a share at 100 rupees, if the stock price hit at 70 to 75 rupees, the few people, whoever sold, they might be happy. Whoever holding the scripts, they may not be in there is a fear with them. So they always say, 1/3 of the people, they always say that they are optimistic about the stock, and the remaining 1/3 of the people, they were pessimistic about the stock. Why you prefer small cap? Because of the momentum in the small cap, because the momentum is much faster. So because no analyst is covering the small cap and mid cap, or few, you can say that few, and I don't want to say the word no, few analysts may be covering the stock. So the information available in the market is very less. So it is very easy for the operator to take up and rig the price or bring it down, and he can make the scripts to hit the stop loss. Your approach is the major cause for the failure. Whenever I see people, if I ask, they say that they enter into the market like the way they enter into casino. So they treat the stock market as a casino. They want to make money in short term. The short term. See, the market is the market cap of the market is in several trillions. You cannot win the stock market by money. You can win the stock market by time frame only. So you treat the stock market as with a gambling approach. The next one is greed and fear. When the stock goes up, the people are greedy. When the stock comes down, there is a fear among the public. Okay, so they want to preserve the capital, but that is a wrong approach. You have to be greedy when others are fearful. You have to be fearful when others are greedy. So the investment is not a zero-sum game. Everyone thinks that investment is a zero-sum game. That is a wrong approach. Only trading is a zero-sum game. Trading, even in fact, I say that the trading is like a musical chair. In musical chair, at last, only one person is going to be the winner. All the others' loss is converted to someone's profit. You note it down. Okay. The people think they are not taking high risk when they buy, when the stock is going up. But that is also a wrong approach. When the market gives confidence when the rising market, but one day it will be slaughtered out. You might note it down. So you have to manage your risk accordingly. The risk management is a very big topic. Okay. Solution. What is the solution for this? You have to be greedy when others are fearful. You have to be fearful when others are greedy. That is the first one. Treat investing in stock market as a business, not as a gambling. Then increase your holding period and add like a stamp collection. See, hold the quality stocks. Don't buy just on the rumors or news or target or stop loss or whatever it is. Just like a stamp collection on every fall. When the fundamentals are good, keep adding it. Okay. In the same way, when the stock price goes up, in a phased manner, you book your profit. Don't do pump and dump into the market. Okay. So be fearful when others are greedy. Be greedy when others are fearful. Okay. I hope this video is useful to you all. Thank you all. Thank you for watching.